Hey, quants. Is this the shortest bear market in history? Let's find out. For BTC, I haven't done much market analysis lately, and I likely won't continue to jump into that in a lot of significant detail. The AI content that I've been doing seems to be much more interest to individuals, and it's more closely related to the code that I generally do versus some of the indicators that I produce. So I will not be doing a ton of this, but I do want to come over every once in a while based on some of the macro time frame of things and take a look and follow up on some of the content that I'd done earlier for my own interests, and also just for anybody else that might have been following along for those specific use cases. I think the way that I've lined up my charts is a little bit different than some other people, so I think it just provides a slightly different perspective than what you might get from some of the other channels. So if you were around at that time, you might remember this particular layout that I made. This layout captures the 16-year cycles, the 4-year cycles. But what I did was I went ahead and I picked them, I laid them out in the way that I thought made sense, measuring from top to top or bottom to bottom. And then I measured those out. And for this next upcoming cycle, what I did that might be of interest and what we'll be talking about a little bit in this video is the shortest bear market guess based on the previous bear markets, and also the longest bear market guess based on the previous bear markets. And so I'm gonna grab, I don't know, I'll just grab this ruler here so we can see. A box might have been a better thing to draw on here, but since I haven't done that already, I'm just gonna start with this ruler that isn't gonna measure the way that I want, of course, because it's gonna go up, down, there we go. So we've got these two horizontal lines here. I think I didn't grab it exactly right, so it shows 33 bars. We're on a weekly time frame, so 231 days. That's gonna be off by probably 7 days or so, because I think I just missed grabbing the very left bar here. But with that said, this is not the shortest bear market that we've seen so far, and it is also not yet the longest bear market that we've seen. And I say that because it still could continue to be a bear market. We haven't broke, if we're looking on the weekly time frame and we're using the Gann swing indicator, we did not yet break this swing high. Now, if you were just using the 1 day swings, we would have been looking at breaking this, or the 1 bar swings. Your trade entry would have been right at the top here when we pierced this previous high, and I'm just going to hover over it right there so you can see the exact day. Again, this is on the weekly time frame, not the daily time frame, but that's when we would have entered that trade. Potentially that would, depending on your strategy, because I have two strategies on here that I like. Sometimes they don't always mix well, and what I mean by that is I've got my master strategy on here, which uses just the 200 moving averages and the 821 moving average, and you can see right where this previous high was right below the 200 EMA, and so those could be in conflict where you may have been expecting some resistance there, but as we can see, that would just blast right through there. So if you were following a Gann, just a specifically Gann strategy, that would have been your entry. If we go back and look on the daily time frame, you'd see the master strategy had the 821 cross. You would have got in a little bit earlier than that. Earlier on this, you wouldn't have got in earlier on this break, but you would have captured some of this move. So back to the point about the duration of the cycles here. We're sitting in the middle. This looks good in terms of finishing the market, starting a bull market, kind of in the average spectrum. We're not waiting all the way to the end, and we're not shooting off right at the beginning. Although I would have said, I did mention something. I think I had shown this chart back when back around this time frame here, and so I do remember I mentioned that after this move, maybe we are seeing the shortest bear market, because or maybe off by a week and it's just already recovered and taking off. I mean, I guess you could have called it low down here. This was your high, higher low, and then it starts moving from there. That ultimately just rejected, and so we have not yet broke through that. So there's still the potential for that resistance there, and we just dump out again. But all things being equal here, if we're looking at averages, I mean, we're kind of right in the middle. And if we end up going bull mode right now, that'd be pretty on par with just being average. So I just wanted to point that one out. The next chart that I'm going to jump on here is the DCA strategy or indicator that I built a while back. And so this one right here, the whole point of this thing was to say, what if I made a simple, more optimized, something that was more optimized than just I'm going to put X amount of dollars every day and just go forever. And the point here was that I want to buy when I see bigger dips, and then when I see some higher peaks, that's when I would sell. And so I'm not going to be talking about the selling points right here because we're not there yet. But if we would have been following that, we would have been selling we would have bought back around this time frame. So of course you don't know until the candle closes. And so I think it's more realistic to look at the open for these. And so you'd have been buying at 112,000. Obviously we're well off of that. But if you're doing this DCA approach, you're not buying everything on day one. And so that would have been your initial buy. And that was after a 16.8% drop. The next one was a 21% drop, and you would have been buying right around here at about 103,000. And then the next one, we've got the 31.8% drop. And so that was pretty close to the close on that one, $86,000. And then we get down into where the things got even lower. And so on that one, we would have been buying at $78,000. And then the final one, again, I'm not counting the very bottom of this candle because ideally you're going to wait for that to close, but it did open at about the same price. And so $62,000, obviously that would have been an ideal price there. This other one I think was, yeah, we're floating right around that value right now. So all of these buys would have been underwater is the point there. However, you would have had one position that was open and you weren't trying to pick bottoms. You're just DCAing based on that idea. Another concept that you can throw in there is buy a lower percentage amount at the higher values and then increase as you go down. So maybe I'm only spending 10% of my capital here, 10% here, 20% here, 30% here, 40% here, something like that. And that probably doesn't add up to 100%. It might be pretty close, but I just ran through those numbers just to make the point about how you might apply that so that you're actually getting more dollars in at the lower valuations. And you could apply that same concept when you're going up. So when you start getting the initial ones, maybe you're only selling 10%, 10%, 20%, 30%, 50%, something like that. So let's go ahead and move on to the final chart, and that will be the last thing that I am going to cover today. This was another example of the Quant Alchemy Daily Brief we had in the Gann swing. The Gann lesson was discussing breaking up pivotal swings into eighths and then measuring it there. And so I am using AI to help me track this, but it initially did not draw the lines right. It ended up picking up one of these swings that clearly, and this is just one of the issues you can run into AI, right, is a swing is a swing, and it's not really doesn't understand what a pivotal swing is. And so I wanted it to pick a better swing. It picked one of these small ones and broke it up over these tiny lines, which didn't really make sense. And so looking here at this particular swing, this is a fairly large swing in the context of the moves that we've had recently. And so it also does kind of capture the range. Obviously, it's not capturing the very top or very bottom of the range. And then it broke that up into eighths. And so I am going to continue and track this forward until we're either completely out of this range to the upside or the downside and just see how that plays out. What I thought was kind of interesting today, this candle is still open, but what's interesting is it looks like the close is hanging out right at one of those eighths lines. And we also did bounce off of this. So now these lines were not drawn until I think I set this up just yesterday. However, this swing happened on August 21st. And so if you were doing this manually and you saw that large swing and you said the same idea that I said is, hey, that kind of captures the range. I want to try and use this swing. this eighths concept and apply it to that specific swing. You could have done that back then. You wouldn't have done it on this specific day because you wouldn't have known until after we get a drop. But once you get that drop, then you can apply that, and you see this swing change. Then you could have applied that same concept there and been tracking this forward. And if you had done that, it would have been interesting to see how many plays you get off of these little lines that seem somewhat arbitrary, but they're using division of eighths, which is just kind of a Gann concept that came out in the newsletter. If you're interested in that, you can subscribe to that newsletter. Moving forward, I do have some other AI stuff. Revit and I are working on something together. We have similar ideas on terms of the back end of our vision, the front end of our vision, in terms of like how people get in there is slightly different, but I'm super excited about something I have been working on. It does tie in AI, but what it does not offload everything to AI in the sense that AI is going to make me rich kind of idea. I think those tend to be not well, those type of ideas don't tend to work out very well. Obviously, if they did, everyone's going to be doing it. So the concept that I have really allows you to leverage AI to help facilitate your workflow so that the workflow is not AI driven, but it can be, well, the workflow is a static workflow that gets you to the point of having forward tested strategies that you can simply monitor. But AI helps you get to that point. So if you have 100 ideas and it takes you forever to implement one of those ideas, AI would be able to help you implement those ideas all the way to an incubation period where you're then just waiting and watching your strategies. And so one of the concepts that I've heard about this that I kind of liked is I've heard one of the algo trader guys online talking about, oh, I've tested over 2,000 strategies and I only have 7 viable strategies out of those 2,000 I tested. And I think that is relevant to what I was building. And so I'm kind of channeling that concept here where it's easy to have, I think it is easy to have 2,000 different ideas. But how do you get to a point where you know whether any of those ideas are good? And so the point of this is to close that gap so your ideas end up going from the idea to the is it actually good in a systematic manner that we can trust, because it's not just AI mumbo jumbo. And then you get to filter out those 7-ish, in this particular example, 7 strategies that are actually viable. And so that, I think, is really part of the hard part of trading, is not only having ideas, but being able to validate your ideas all the way to the point where you're willing to actually put money on it and not just throwing money in the trash can. So if you're interested in that, I will be providing more information later on that. I'll probably go ahead and set up a wait list like I've done on some of the products, so that if you're interested in joining that, you can wait list, and then we'll probably add some people in to help test things out as things move along. But that'll be coming in the future. So, do the whole subscribe and like kind of thing if that's what you're interested in and you want to stay up to date on that upcoming information. So I also have another video that I will be doing here in the future, and this again will be AI related. It'll be an AI benchmark video. If you saw that it's OX model, I feel like I'm saying that wrong, OX. People were calling it OX. So it's like the OX model that was like just a kind of what do they call it? It was like a shadow model. Nobody knew who created it. It turns out it was GLM 5.3 Flash. I've seen some good things about it, and so I'm updating my AI benchmark to be able to run models through OpenRouter, so I don't have to go and install a Chinese version of something on my computer. So obviously a lot of people are concerned about that, including myself, and so I'm not going to do that. But you can access it through OpenRouter, and so this will also give me the ability to potentially test other models that I want to test. Although going through OpenRouter, you don't get the subsidization, the subsidization that you get through a subscription using something like Claude or Grok or OpenAI. So I'm very curious to see that. So that will probably be one of the next videos that I have coming up. So again, also if you're interested in that, stay tuned, and we will catch you on the next one. Peace, quants.